So today I want to compare Assertio Holdings, which is a position of mine, as you already know, ticker ASRT, as you can see here. So I want to compare Assertio Holdings to some of its peers, so we can have a better idea, so we can have a better sense of how undervalued this stock really is. Before we begin, as always, nothing in this video is investment advice, okay? And with that, let's start. So in this table here, we have the company's market cap, its net debt, its enterprise value. We have the company's trailing 12 months revenue. We also have the average growth rate for the last 3 years. Moving on, we have the company's gross margin, its operating cash flow, its operating cash flow margin. And here we have some ratios. So first we have the enterprise value to sales ratio, and then we have the enterprise value to operating cash flow ratio. And lastly, here we have the net debt to operating cash flow ratio, which tells us how much time a company needs to pay off all its net debt with the operating cash flow it generates. So this is a financial health metric. And as you can see, we have here companies of all sizes, right? Assertio is by far the smallest company of this list, with a market cap of only $62 million. But the important thing for us here is this. As we can see here, Assertio is trading at an enterprise value to sales multiple of only 0.07 times, while the average for these companies here stands at 2.2 times. So based on this metric, we can say that Assertio is massively undervalued when compared to its peers. Same thing if we look at the enterprise value to operating cash flow multiple. I mean, as you can see here, Assertio is trading at an enterprise value to operating cash flow multiple of only 0.7 times, while the average for these companies here stands at 17. So yeah, we can say Assertio is massively undervalued when compared to its peers. However, there's a reason for that, right? And what are the reasons? So, as I told you, we had the opioid scandal when the company's name was Depot-Med back in 2017, around that time. Then the company started to recover with a drug called Indocin. However, Indocin was destroyed by competition, and now we have the Rovidon phase. So Assertio Holdings bought Spectrum Pharmaceuticals, which was another pharmaceutical company that came together with a new drug called Rovidon. So yeah, Assertio is trading at a massive discount when compared to its peers. However, for example, we have this track record issue, right? We have a reason for this low valuation, right? Besides, as we can see here too, while most of these companies have been growing over the past 3 years, Assertio, on the other hand, has been showing declining revenues. So as you can see, over the past 3 years, Assertio's revenue has dropped 4.2% on average per year. So these are some of the reasons why Assertio is trading at a massive discount, at very low valuation levels when compared to other pharmaceutical companies. However, these reasons are ceasing to exist. And why do I say that? Well, because first, everything related to the opioid scandal, for example, was left behind. That's already in the company's past. Assertio Holdings doesn't have anything to do with that anymore. As you've seen in my last videos, all the risk related to this opioid scandal was already solved. Besides, yes, it's true that Indocin got pretty much completely destroyed by competition. Indocin basically went to zero. However, it is also true that this issue is already priced in. Meanwhile, Assertio now has this new drug called Rovidon that has been growing a lot over the past years. Rovidon has been slowly replacing Indocin, so for me, it's just a matter of time before Assertio starts growing again on an annual basis. And then what will be the excuse for this stock to continue trading at such ridiculous multiples? Because as we can see here, Assertio has an excellent gross margin when compared to peers. While the average for these companies stands at 60%, Assertio is showing a 68% gross margin. So based on this metric here, Assertio actually deserves a premium. Besides, in terms of financial health, Assertio is at an excellent situation. As we see here, Assertio's net debt to operating cash flow ratio stands at -4. And this number is negative because Assertio has a negative net debt, which means that Assertio has more cash than debt on its balance sheet, which is excellent. So while this ratio for Assertio stands at -4, the average ratio stands at 4.3. So in other words, Assertio is in a much better financial position than any of these other names. While these companies on average need around 4 years worth of operating cash flow to pay all their net debts, Assertio, on the other hand, has more cash than debt on its balance sheet. So again, once it becomes obvious that Assertio has recovered, what will be the excuse to avoid this stock? Now, it's true that regarding operating cash flow margin, Assertio is now behind its peers. After all, in the last 12 months, Assertio is showing an operating cash flow margin of only 9.7%, while the average for these companies stands at 15.4%. However, let's see how this margin evolves as Rolvedon continues to grow, because I think Assertio can deliver a 15% operating cash flow margin at some point. I think Assertio can actually surpass this kind of margin. In any case, my point is this: Assertio, when compared to its peers, is really a steal. There's no doubt Assertio is trading at much cheaper valuation levels than any of these companies. But I think this valuation gap is about to close in the coming years. So for example, I don't think it is impossible at all for Assertio to trade at an enterprise value to sales multiple of 2 times. If Assertio recovers, if Assertio starts growing again, if it starts showing profitability and cash generation, well, I don't see any excuse for Assertio not to trade at such a multiple. On top of that, the company has more debt than cash on its balance sheet. So no, I don't think it's impossible at all for Assertio to trade at an enterprise value to sales of 2 times. Now, if that happened, if Assertio traded at such a multiple, considering the cash the company has on its balance sheet today, but if that happened, Assertio stock should get to $51. And let's remember that today we're trading at $9.30. But if Assertio traded at an enterprise value to sales of 2 times, this is where this stock would need to get. Here, $51. And with that, we close today's video. Assertio, when compared to its peers, when compared to other pharmaceutical companies, is indeed a steal, and I think we have a lot of upside here. Anyway, that's it for today, and see you next time.